Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Well guys, as usual, let's try to create the trading plan for the coming week. Well, euro currency on the short-term perspective could be really interesting for trading. And on the longer time frame, on the monthly chart, currently we still do not have any direction, since market is calling around the previous top, and right now we still can't say that whether it's definitely the reversal or whether it will be the upward continuation, because now door is open as for the former as for the latter. Well, and as we do not have the direction on the high time frame charts, well, currently we in fact have no choice but to be focused on the trading on the intraday charts and on the daily time frame chart. Still, on the weekly time frame we have not bad patterns. Particularly speaking, that was the wash and rinse of the previous highs on the weekly time frame chart, and that's the bearish sign, bearish pattern, and all following the downward action. I think that we could treat as a bit, as let's call it, as the compounded engulfing pattern, because if you will take a look at the weekly time frame chart, you will see that this move down in fact engulfs almost the whole month of the previous trading. And from that point of view, that is some sort of the engulfing pattern. As a rule, when the market creates the engulfing pattern, in the 90% of cases it shows minor bounce inside of the body of this pattern before real move to the downside that is triggered by the engulfing will follow. And that what we see right now. Speaking purely based on the daily time frame chart, we see that this engulfing pattern is in fact on the daily time frame chart the first reversal swing, because previously we have a long upward action, market is forming high highs and high lows, okay, but that is the first swing when the market has created the lower low. And as previous momentum up is still solid, market will need some time and room to fade it. That's common action. We have discussed this million of times already. So it means that when the market forms the reversal swing, the retracement after it could be deep. And here is our task, is to estimate how deep this retracement will be, because based on the weekly time frame analysis, it suggests downward continuation, and that probably will take the shape of some A, B, C top pattern, something of that sort. Well, based on the weekly time frame chart, on the daily time frame chart, I would point this area as the potential target of the retracement by many reasons. First of all, because that is the favorite for euro currency, the 50% level. Euro currency likes 50% level, so you can see here downward action has started and this has ended right at the 50% support that was accompanied by the monthly pivot support. Okay, so that bounce has followed. Right here we have the monthly pivot point right in the same area, and weekly pivot resistance one of the coming week. Slightly higher stands the 618 resistance, 137.60. So based on the daily time frame chart, somewhere around 137.20, 137.60, this retracement should be over if this is really valuable bearish setup on the weekly time frame chart. But currently I do not see any reasons to think that it is not. Currently I do not see any signs that this will not work or will be cancelled by some price action. I do not see any flows right now on the weekly bearish patterns. So that's why our first task on the in the short-term setup is to wait when this retracement up will be over, and I suppose that it should happen somewhere in this cluster. And the final moment that is also significant is that trend will remain bearish on the daily time frame chart if even market will reach this area. So that is very good for the bearish development. And finally, if market will take the shape of this ABCD, you could see that the destination point will be right at the yearly pivot point. It's 136.75. We have discussed the importance of the appearing yearly pivot points very close to the current action, and we know that price will gravitate to it. That is another reason for possible downward continuation. Despite the starting point what you choose, if you will take as the starting point this high and you will draw this a bit greater ABCD, well, in this case the target will be slightly lower, but for the yearly pivot point it's really big scale, and it's absolutely doesn't matter whether it will be 30 pips higher or lower around it. The major point here is market should challenge it, should test it. As it will test it, well, it could move slightly higher for the 100 pips for instance, and then return right back. In this case, just recall how market behaved around the yearly pivot point of the previous year. It stand around its very long period, approximately within the months, and the fluctuations was above and below for approximately the 100 pips. So that is not something curious for the yearly pivot point, because yearly pivot point is really big scale and rather solid range around the number. So it's 134.75. I think that market could show the fluctuation somewhere around 134, 135.50 area, so that will be still around the yearly pivot point. So now let's take a look at the intraday charts. Maybe there we will find some another confirmation of the possible targets of the retracements. First of all, this is the 4-hour time frame chart. And here you see that trend holds bullish. I don't have the MACD, but you will see it if you will draw it. Well, probably we could treat this action as the double bottom pattern. If we will measure the target, so we will take the extension equals by 2. So A, B, C bottom counted to the upside. This target coincides with the weekly pivot resistance 1. So the target of this double bottom pattern slightly lower, slightly higher than this area, but it still stands inside the range of 137.20, 137.60. If you would like to trade on the intraday charts, make the scalp trade on the long side of the market, I have no objection about it, but choose for the target the lower part of this resistance. It's around 137.20 area. That's just safer. On the hourly time frame chart, that is probably will be useful for scalpers. So if you could see, market has accomplished small A, B, C bottom, has reached precisely 1618 extension of this pattern. And take a look on the daily time frame again, where you can see that market now stands at the daily resistance 136.79, 136.80 area. So market has tested, bounced slightly right back down. So I have no objection if market really could show some retracement down. We'll test the weekly pivot point. It hasn't been tested in the beginning of the week because market will open slightly higher, and that will be also the first fib support is 136.33 area around weekly pivot point. But I do not want to see the move below this area, because this will be too deep below the neckline of the double bottom. So if market will move the weekly pivot point, that will be still approximate, because here we see some shadows, so that is some sort of the allowable space for retracement. So market could, for instance, test the weekly pivot point and continue move to the target. That's absolutely normal. But moving below the weekly pivot point will be not quite desirable for bullish development, because market will simultaneously put under question the existence of the double bottom, because pattern hasn't hit the target, but market already will move below the weekly below the neckline, and at the same time market will shift the short-term sentiment to the bearish side. That will be absolutely unwelcome development for upward retracement, and that's why we should keep the close eye on this area. That is acceptable level for retracement, but I don't want to see the deep action. I prefer to see that market will stop somewhere in this area and then turn to the upside. So that being said, our trading plan is follows. We will start from the hourly time frame chart, and we will wait for retracement to the 136.30, 136.35 area and testing of the weekly pivot point. If market will behave as it should in the current development, it should turn to the upside. So that will be the level to watch for those of you who trade on the intraday charts and would like to make the to take the long position in the scalp, make this upward scalp trade. then our focus will be on this resistance clusters 137.20, 137.61. That's also will be the target for those who will take the long position here. For others who trade on the daily time frame, that will be the hot time, since we will have to wait and search for the reversal pattern on the intraday charts, on the hourly time frame chart. That will let us to take the short position with the possible target around yearly pivot point around 137.75 area. That's our trading plan for coming week. Let's see what will happen. And as you can see, the euro currency right now is really interesting to trade, because it's really a lot of action, and every day we will see some events are happening here.